Good evening, everyone. Today, I welcome you all in LVC lecture of Paper 3 CA Final Paper 3 Advanced Auditing Assurance and Professional Ethics. Today, we are going to cover remaining part of chapter number 8 Specialized Areas, and we will start with chapter number 9 Related Services. And I hope you all are doing your written practice side by side and preparing your handwritten notes side by side, because in last minute revision, the notes prepared by you, your handwritten notes are really very important. They play a very important role in your revision. So I request every one of you to please maintain your notes and try to cover all the topics side by side. If you have any doubt, you can ask Harshad sir anytime. And I request Harshad sir to please start the session, not taking much time.
Okay. Thank you, ma'am.
Thank you, sir.
Hello, everyone. Welcome to today's session. So today, as ma'am said, we are going to continue the chapter number 8. There is one essay that is remaining that we will discuss about. Post that, we will jump to the chapter number 9. Okay. Now, before I proceed, anyone has any doubt with respect to any of the topics that we have discussed till now? Any doubt? Okay. If no doubts, then let's do a quick revision of whatever we have discussed till now, and then based on that, we will proceed ahead. So, what we have discussed now till now in chapter number 8. Can anyone tell me what we discussed in essay 800? Anyone? What we discussed in essay 800? Okay, I'll tell. So, when we talk about essay 800, basically, essay 800 is on the audit of FS, which is prepared as per the special purpose framework. When I talk about special purpose framework, it is the framework which is required for as per the needs of the specific users that we have discussed. For example, cash basis, for example, contract basis. And when we are doing the audit, again, remember one thing: we are doing the audit, all the provisions of the audit, all the assets of the audit are applicable to the extent they are. Okay. So I say 200 to 799, all everything is applicable. Okay, 700 series, 500, 400, your 300 series, 200 series, everything is applicable. Now the question comes is, then where is the difference? The difference comes is when we do and when we apply those essays, we have to think from a specific point. Like that's why they are known as a specialized area. For example, how the materiality will be, how your reporting will be, how SA 700 series will be applied, EOM paragraph, OM paragraph, other matter paragraph, a lot of things are there. So we discussed all these things in that particular essay. Then we discussed in essay, we took essay 805, wherein we discussed about audit of a single FS or a specific element. Now, what is audit of a single FS or specific element? Single FS means, let's say, for example, P&L, balance sheet, statement of cash flow. Okay. Now, this can be of the general purpose financial statement. It can be of a special purpose financial statement. So, when you are auditing a single FS, what things you need to take care? For example, again, it's the audit, so all the assets will be applicable, no doubt in that. But how to apply in respect of a single FS that we understood in SA 805. Now, with 800 and 805, now we will be talking about a specific S, which is SA 810, that deals with the summary of FS that is derived by the, which is audited by the same FS. So, it is engagement on reporting on summary FS. Okay, reporting on summary FS. Now, you guys have gone through the chapter. Can anyone tell me what is a summary FS? Summary financial statement. What do you mean by summary financial statement?
It contains less details than that of the detailed audit. Only
Yes,
summary is in it.
correct. Good. It contains less details. What else? Anything else with respect to the summary financial statement you would like to add? Okay, so I'll tell you. When I talk about summary financial statements, these are the financial statements which are derived from your normal financial statement, which we call as the historical financial statements. Okay, they contain the less details. Yes, they contain the less detail, but still having less detail, they provide a structured representation which is in consistency with that particular financial statement from which they are derived. So the structure is the same, but still it contains a less detail. Okay. Now, when I talk about these financial statements, and when I talk about specifically 810, okay, so this standard is applicable when an auditor is required to present a report on summary financial statements which are derived from the financial statement audited by the same auditor. Means I am the one who audited the detailed financial statements. Now I am the one who has to issue a report on the summary financial statement. Here, the auditor is same. Remember that in 800, 805, we discussed, like, auditor may be different. But in this particular scenario, auditor is same. The auditor will not change. The auditor who is going to issue the report is same who issued the report on the main financial statement from which it is derived. Okay. So that is a one important point that we need to remember. And whenever I will use the term auditor over here, the auditor will means the auditor of both, because you have a same person who is auditing. Okay. So that is the main difference that first we need to understand in this particular standard or in this particular case. Okay. Let's go to the study material. Okay. Now, when I talk about SA 810, what are the objectives of the auditor in this scenario? What auditor has to do in this particular engagement, you can say. Now, the report that auditor is issuing on the summary financial statement, before issuing that report, auditor has to understand whether it is appropriate to accept the engagement on preparation, on reporting on summary financial statement. Summary financial statements will be prepared by the management. The way similarly, we do in the normal audit, that general purpose financial statement prepared by the management. In this scenario also, summary financial statement will be prepared by the management. Here the auditor will issue a report on that. But what kind of report it will be? Can anyone tell me what will be the report over here? What do you think we will cover in our report? Anyone? So in normal financial statement audit, what we do, we say true and fair, reasonable assurance. Yes or no? What report over here we will issue? Anyone? Yes, Geeta? So, like, for example, in our normal audit, in our normal opinion, we say financial statements are, reflecting true and fair picture of our books of accounts. What will be the opinion in this scenario? No?
That the financial statements are consistent with the financial statements audited.
Absolutely, yes. Very good. So here, the auditor's role is to issue an opinion that the financial statements, basically the summary financial statements, are reflecting a fair summary of the audited financial statements. So we are not going to audit again the entire financial statements. No, we need to make sure that just the financial summary financial statement which are prepared are reflecting the appropriate picture of the audited financial statement. Fair summary. It should be a fair summary as per the fair presentation framework. Or if you are preparing as per the any compliance framework, then we will say that accompanying summary financial statements are consistent in all material respect with the audited financial statements. Okay. And for that, we will perform this entire audit. We will perform this entire, you can say, procedures. So, two things. Number one, whether we should accept the engagement. Number two, to express an opinion that whether they are in line with the audited financial statement or not. Now the question comes is, when you go and perform this engagement, when you are going and accepting this engagement, the first part, acceptance the engagement, what is the thing you think will be relevant for us to understand? What will be the first thing you will ask from management, or you will check before accepting this engagement? Anyone? No? Okay, in a normal case, we yesterday also discussed what we do before we accept the engagement. The first thing that we check. We discussed yesterday itself. Yes.
Asset 210.
But there is specific point of that we check.
Independence.
Okay. But that's something else we discussed yesterday. The first and the foremost thing.
If criteria is applicable or not in that.
Yes. So if I talk about SA 210, the first thing was determine whether the financial reporting framework to be applied in the preparation of the financial statement is acceptable. So first I will check whether the financial reporting framework is acceptable or not. In this scenario, I don't have a financial reporting framework. Here I will not say a financial reporting framework. Why? Because financial reporting framework is for the general purpose or full financial statements. What I will having here is more onto the criteria. I will call this particular thing as a criteria. So the preparation of the summary financial statements, okay, requires that the management should reflect the information in that particular summary financial statement as per the criteria. Okay, so the criteria is the basis on the basis of which the summary financial statements are prepared. So for example, how much summary you need to prepare? So I can show just one line in the P&L. Let's say, for example, if I want to prepare a summary of the profit and loss account, total revenue, total expenditure, net profit. This is also a summary. Another way of summary, total operating revenue, total non-operating revenue, total operating expenditure, non-operating expenditure, and net profit. This is also a summary. So at what level I need to prepare a summary is determined by the criteria. the criteria applied by the management in preparation of the summary financial statement is something that we need to understand. Whether the criteria which is applied is acceptable. What is the second thing that you need to have before you proceed with the engagement? What is the second thing that you will check? What is the second thing that you will check? Anyone? Okay, so when you are accepting the normal audit, what is the thing that you check or you ask management, please confirm this, then only we will proceed.
Its nature, its purpose.
Okay. Again, so let's go to the essay 210. Over here, what we will look into that we ask management to understand and to accept their responsibility. Management accept your responsibility for preparation of the financial statements, for maintaining internal control. Okay. In the similar line, when we do this kind of engagement, over there also, we will ask management make sure that after having understanding of the acceptable criteria, we ask management, please agree to your responsibilities. Please agree to your responsibilities that, okay, this is what is your responsibility. For example, you have to prepare the financial statement. You have to make the audited financial statement available to the intended users. That so the one of the criteria is that these summary financial statements are to be presented with the audited financial statements. If permissible by law, if not permissible by law, then we need to evaluate what is the scenario, why it is not permissible. Okay. In that case, we need to describe that, okay, from where these are being prepared, what was the audited financial statement. Otherwise, if permissible by law, then make the audited financial statement available with the summary financial statement, so that the readers can understand from where you have derived or from where you have prepared this summary financial statement. Okay. And the third part is agree with the management on the opinion, that how and what is the form of the opinion that you will be issuing. So these are the things that first we need to ask the management to agree. So one, that it acknowledges and understands its responsibility for the preparation. Second, that to make audited financial statement available for the intended users. And the third, that they agree with the form of the opinion to be expressed on the summary financial statement. So these are the three things management has to understand, management has to accept before you proceed. Along with the audited financial statement, if there is any other document, okay, let's say for example, when I say audited financial statement, now management has to include auditor's report also in that document. It should not be only financial statement, it is the auditor's report on the summary financial statement, that is also required to be included along with the summary financial statement. So include summary financial statement, include audited financial statement, include auditor's report whenever you provide. So provide a complete set, and then on the basis of that, If management is ready to accept this, this is the precondition before you start this particular engagement. Clear?
Yes, sir.
Okay. Now, basically, once we accept this, once we ask management to accept this, then on the basis of this, we will start our procedures that are required to be performed. Okay. Sorry. But before we go, before we proceed ahead, we will discuss something more on the criteria. Now, I want to understand from your side or from you how you will determine the criteria is acceptable. What things you will check to make sure that the criteria is acceptable. You understood now what is the criteria. Purpose and nature. Okay. Yes. Purpose and nature. What else? How you will determine what is the acceptable criteria? How you will determine that?
What information is to be provided in the summary financial statements?
Okay. What else? Very good, Manish. Yes. So just to provide you a short way to remember it, in order to understand whether a criteria is acceptable or not, there are few things you need to check, which is N, P, and M. That is nature, purpose, need, and misleading. What is the nature of the entity? Okay. What is the purpose of the summary financial statement? What is the need of the users of summary financial statement? And whether it is misleading or not. So NPNM is something you can easily remember. Okay. That is, what is the nature of the entity? How nature will impact? For example, let's say banking, insurance, NBFC, listed. All these entities will have a different kind of reporting. They already have a different kind of financial statement. So their nature will determine how their summary is going to be. The purpose. Purpose means for what purpose you are giving. Listing, quarterly, annual for investors. Okay. So what purpose it is, like why you are preparing this, what is the need? Then the need of the summary, like users, like who are the who wants a summary financial statement, what is their need, whether they are the investors, regulators, whether they are the you know vendors, bank, financial institution, whatever it may be. And misleading, is it misleading? Why do you think preparing summary financial statement could be a misleading? Why do you think the preparation of a summary financial statement can be a misleading thing?
Because the disclosure is not adequate.
Yes,
This could be
absolutely
misleading.
correct. Very good. So when I say summary financial statement, I am preparing the financial statements based on the given criteria, but they have a very less disclosure compared to your normal financial statements. Your normal financial statements may have a 10 different line items. Let's say they have a provision for, let's say, litigation, or penalty for the breach of environmental laws, something in your P&L. But when you are preparing a summary financial statement, you are just showing one line item for the other expense. Or for example, you have a very big litigation liability which is there, which is shown in the contingent liability. When you are preparing summary financial statement, you are directly dropping that particular note of contingent liability. So it can be misleading because of less disclosure. And that's why the requirement comes that whenever you are sending a summary financial statement, the management has to agree that to make the audited financial statements available to the intended users of the summary financial statements, either you provide them the link, copy, online access immediately, provide a link in your document, because it will provide the user a clear understanding. Like, it should not be the case that okay, they are only getting summary and they are unaware about the main financial statement from which it is being prepared. Then there are high chances it will be a misleading. Are you getting the point? So that's why we need to understand NPNM: nature, purpose, need, and misleading. Once you verify that, you can say that whether the criteria is acceptable or not. Is it necessary that the criteria has to be provided by the law? Is it necessary that the criteria has to be provided by the law? Yes, no?
No, sir. But it is acceptable by law. Means presume that this is acceptable by law.
Okay. So, not necessary that the criteria has to be provided by the law. It can be a criteria which is developed by the management. For example, based on the industry practice, there are scenarios where management will decide what to disclose, what not to disclose. If it is internal regulatory, it is internal. For example, they want to present a audited summary financial statement to the investors. Management will decide the criteria. Management will develop the criteria, but it has to be acceptable by this way: NPNM. Okay. uh, when we are preparing the audit report, okay, and when the management is preparing the summary financial statement, so is management appropriately disclosing, you can say, the nature of the audited financial statement? Like, what was the audited financial statement? Whether the management is disclosing appropriately how the summary is prepared, applied criteria, or some additional information that we need to understand. So from where these have been prepared, for example, they usually management provides that in the notes, that from where these summary financial statements are prepared, what was the audited financial statements, how they are available. Okay, what is the criteria they have applied? If they have recalculated something, then how they have recalculated. If there is an aggregation of the numbers, then how the aggregation is done. And aggregation should be done not to mislead. So all these things are required to be there with respect to the criteria. Now, one of the points we understood that we need to provide the audited financial statement. As an auditor, how will you check that the audited financial statement is available? How will you check that? The audited financial statement is available.
It is done by the same auditor, no? So,
But see, when you are auditing the summary financial statements, one of the responsibility or one of the point was management to accept that they will make available the audited financial statement to the intended users. Okay, management accepted the responsibility. But later on, if management does not provide, then how can you ensure this thing? Simple example. You audited a private limited company, small company, private limited. Uh, you agreed with the management, please make sure that the financial statement are available to the intended users. You said okay. Now you issued a report on summary financial statement, and that management gave it to the investors. When you asked management, did you provide the audited financial statement? Management said, yeah, they are available. They are on the public record on the MCA. So intended users can go on the MCA and can fetch the financial statements. Do you think it is fine? That is also making available. It is on the MCA website. Go and get it. So you need to understand, from how the management is making available those financial statements. For example, as I just now said, is management specifying that the summary financial statements are prepared from these financial statements of this year of with a report dated this and everything this? Are they providing that record? Number two, whether that financial statement is available easily in the public record, or it is something someone has to first create an account, pay an amount, and then they might get after a detailed searching, which is practically not feasible. Or is there any other process that which can help the users to get ready access to the audited financial statement? So all these things you need to understand with respect to the how the management is making sure that financial statements are available. Tomorrow management can say no, they are available on the MCA. Apply for it. Or management might say, oh no, they are available in the head office. So the intended users can go to the head office of company and then they can verify over there. That is also making available. So all these things are required to be verified, understood, and then you may proceed with this. So it's a bit different than what we have discussed till now, because there is a specific requirement. Otherwise, there are high chances it may become misleading. Clear? Any doubt? Any doubt till now? Okay. Now, that is before acceptance that we discussed. So whatever we discussed now was with respect to the before acceptance. That, okay, we will do all these things for the acceptance purpose. Now the question comes is, we understood that. Okay. We understood what is required to be done before acceptance. Now you accepted the engagement. What procedures you will perform? Whether all the essays that we have understood till now are applicable. What do you think? All the essays that we have understood till now will be applicable in this scenario? Yes or no? Yes. Whatever essay we have understood till now, essay 200 series, 300, 500, 700, do you think that will be basically applicable in this scenario?
No, sir.
So let me show you an example of a summary financial statement. Okay, so just let me show you first the summary financial statement, and then we will discuss how and what level of procedures are required to be performed. Okay, remember this document that we were discussing yesterday? It's the prospectus, again publicly available document. Now if you see, this document has a lot of things, and one such thing in this document is this summary of financial information. Okay, summary of financial information. So this document has a summary of financial information. Now let's go to that and understand that. This is the summary of restated balance sheet. Again, now here they have prepared a summary which is in structure it is same, but why it is called summary? Because it does not have the notes. It is the same structure of the balance sheet, but it may not have the notes. Summary of restated profit and loss account. Again, it is the same structure, but it may not have that much details. Summary of restated cash flow. That's it. Nothing else. So these are the only things which is there in the summary financial statement. There is nothing more to it in this particular scenario. So now, if we are auditing this kind of scenario, if there is an engagement to issue a report on this summary financial statement, in that case, we need to understand, first of all, that whether the summary financial statements adequately disclose the summarized nature. Means, is it something, let's say for example, this is in this scenario we have the same structure, but what if let's say we remove this particular part and just show this total, this total, this total, and sometimes what they may do is they may net off the total current asset and total current liability to show working capital. So whether the summarized nature and identity of the, whether that particular summarized nature is appropriate, first thing you need to check whether it is disclosing its appropriate nature. What if in case of preparing a summary restated balance sheet, I net off the working current assets and the current liabilities to show the working capital? Or what if I net off everything and I show net worth? Summary. It is a summary. So whether the first and the foremost thing is criteria, whether it has been applied or not. When you go to audit, you check whether the criteria has been applied or not. Okay. Then after that, again, as I said, whether the financial statements, summary financial statements, provide the detail, like from where they were derived. What were the financial statements from which they were derived? Third, whether you need to compare the summary financial statement with the audited financial statements, or if there is a recalculation, then whether the recalculation is appropriate. So we will trace it back. If they have totaled it at the total non-current asset, total current asset, then we will total it out. Okay, we will total it out. And accordingly, sorry, and accordingly, we will trace that particular part. We will check that particular part, that this number from where it is coming. So for in this particular scenario, if I talk about this particular number, let's say, is it the same number that is appearing in my financial statement? Is this the same number that is appearing in my financial statement? Is this the same number which is appearing in my financial statement? We have to trace that back. Are you getting the point? So as a result, to understand all these things, we have to trace this back. So, sorry. So all these procedures we have to apply. Here, the procedures are different than what we apply in the normal audit. Okay. So here the procedures are different than what we apply in the normal audit. We have to first understand whether the summary financial statements are adequately disclose their nature, not working capital, not net worth. They should be appropriately disclosing the nature. Now, summary financial statement, whether they are accompanied or whether there is a reference of the audited financial statement available, like from where or from whom the audited financial statements are available, what audited financial statement from which they are being prepared. You need to evaluate whether the summary financial statement adequately disclose the applied criteria, how they have been summarized. Compare the number and recalculate if required to match the number. Okay. Again, check whether the applied criteria is followed or not. Check for the level of aggregation. What is level of aggregation? How much, total it has been done. How much totaling it has been performed. Like, combining it has been performed. Is it misleading? If I do a lot of aggregation, if I total it out, entire balance sheet, total asset, total liability, that is also summary. But that level of aggregation is misleading or not. For example, in P&L, I only show, total income, total expense, net profit. In balance sheet, I only show total asset, total equities and liabilities. That is not a summary. Like, that is extreme level of aggregation. So I need to understand that. I can give those things in the bullet point also, and I can still say that it's a summary financial statement. Not necessarily I retain the structure, but whether that is appropriate or misleading, or whether you will still call that a summary financial statement or only summary. So we need to understand whether it's only summary or summary financial statement. Okay. So these are the things that we need to understand and we need to perform as a procedure. As I said, you are not required to perform the entire audit again. We are not required to perform the entire audit again. So the way, as I said earlier, if you go and if you see the name, till now what we have seen in the name is it's an engagement to report. I am not saying it's an audit. The name itself does not contain an audit. It's not an audit. It's an engagement to report on summary financial statement. In other essay that we have seen till now, for example, essay 805, the name contains audit of single financial statement. If you go to essay 800, you will see name contains audit of financial statement prepared in accordance with the special purpose framework. It's an audit. That's why I say wherever I'm referring to the audit, 200 to essay 700 will be applicable. But here I'm not talking about audit. It's not an audit. It's an engagement to report on summary financial statements. So in this particular scenario, you are not performing audit. You are not doing an entire audit again of the financial statements. No, this is not an audit. You are issuing a report on the summary financial statement. It's an engagement to report. That's it. It's not an engagement of audit. It's an engagement to report. That's why the audited financial statement, which are in accordance with the essay, audited by the same auditor, you have to check whether the summary financial statements are prepared from that. So no need to audit again. If you are not doing the entire audit again, then how all the essay will be applicable? It will not be. You are not required to apply all the essay again. You are not required to perform the entire audit again. Are you getting the point?
Yes.
Okay. Any doubt till now? Any
So,
doubt
sir,
till
all
now?
essays are not, sir, all essays are not applicable to it.
There is no need to apply because you are not doing audit again of the financial statements.
Okay, sir, thank you.
See, my engagement is to check whether the summary is appropriate or not. Now, I am the auditor who has done the audit. I am the auditor who has already issued the audit report. Okay. So, if I am the auditor who has issued the audit report, I have already performed all the procedures. I have already applied all the essays. Why should I do a duplication? I'm just here to check the summary.
So only some summary, we have to give the report of it.
Yes. See, the here in this particular type of engagement, if I talk about, you have a audited financial statements from which there is a summary financial statement. Okay. This is audited. So you have already audited it. Done, dusted. Essays are applied, everything is done, and from which summary is prepared. Now you are issuing a report. You are what you are verifying whether this can be traced back to this. And summary is okay. In nutshell, that's the thing I'm doing. Whether the summary is okay. Can I trace back to the audited financial statement? If yes, matter over. This is where I already applied the essay. If I can trace back, that means the essay which were already applied in audited financial statement are fine. Applied. Clear?
Yes, sir. It is only for restricted use only. This.
Yes. So that's why I said the first and the foremost condition is auditor should be same. The one who audited the my financial statement, general purpose financial statement, should be the one who is issuing a report on summary financial statement.
Yes.
That's why, yeah. Any doubt?
Sir, thank you.
Okay. Now, the most important part that we need to understand over here is reporting. Why? Because our job is to issue a report. Here we have to issue a report. So we need to understand how to issue a report. Okay. Now, if I say we need to understand and we need to issue a report, do you think SA 700 series will be applicable?
Yes, sir, we have to give the opinion, so this will applicable, I think so.
Okay. It will be applicable. Fine. Second question is, what will be the date of auditor's report in this scenario? Let's say, for example, can I do this? My date of audited financial statement. Okay, here. Let's say date is 30th 9/25. Hypothetical example. And the summary financial statement date is 29th 9/25. So, before it, I signed the audited financial statement. Management also told me that you need to prepare a summary financial, you need to issue a report on summary financial statement also. So both engagements are going hand on hand, and management signed this on 30th. Reason because of audit committee, everyone was required, and here audit committee was not required. So management was able to sign on 29th. Is it fine?
No, sir, after annual matlab, audited financial statement, we will make summary. Na? How we will make summary before the audited financial statement?
Yes. So the date of the and the time of work is very important over here. The auditor's report on the summary financial statement can be later, should be later than the auditor's report on the audited financial statement. Okay. Now, how much later? That depends upon the engagement. Okay. But it has to be later. Otherwise, how will you prepare the summary? That's the question number one. Number two, if it is later, let's say, for example, this is not 29th. Let's say if I remove this, if I say instead of 30th, I say 31st, 10, 25. I hope it is fine. Now, date is fine. Okay. My second question comes is, what about events between these dates? How will you treat the events? Or rather, I should name it the subsequent events. Subsequent event between these dates. How will you adjust for that? How will you apply that? How will you make sure that, what you will do with these subsequent events between these dates? Hmm.
If these events are reflected in audited financial statements, then we can show it in summarized financial statements as well. If
Can
these
you repeat again? I think your voice is low.
Yes, if these events are adjusted in audited financial statements, then we can show them as in summarized financial statements as well.
Okay. Okay. What if they are not there? Like, for example, see, my audit report I issued on 30th 9. Let's say in the first week of October, a big fire happened. or let's say a litigation which was already disclosed in the books of account, which was already there in the contingent liability in the first week of October, that came unfavorable to me. I have to close down my business.
So, sir, SA 560 will be applicable.
So how we will treat that?
Only in notes we will give, because adjustment can't be done because annual final statement is already prepared.
Okay. Okay. Yes. Now, see, first of all, we need to understand that the summary financial statements which are prepared as per the criteria. Whether criteria requires you to disclose those events or not. Can I go against the criteria and ask them to disclose which is not required to be disclosed by the criteria? Let's say, for example, management denies, I will not disclose, criteria does not allow me. Then what you will do? And even as an auditor, am I required to check for these events? So two questions. Number one, as an auditor, am I required to check for these events? Number two, management denies from disclosing the outcome of the litigation. What you will do?
Those charged with governance.
Okay.
Material uncertainty is still relevant. So we cannot deny that.
Okay. Material uncertainty. See now. So you are saying auditor has a responsibility to obtain additional evidence about subsequent events.
Yes.
Then you are going against the 560. What 560 says? That whatever, see, when we discussed 560, we divided the events in categories. Events occurring up to the date of auditor's report and events occurring after the date of auditor's report. So for the events, if I, let me show you 560. Okay. Remember this, something we discussed when we were discussing 560. So when we were discussing 560, we talked about there are two things. One is an event and one is a fact. Subsequent events are made up of two things, events and the facts. We are, when I say facts, they are the after the my audit report is signed. This is the sign of audit report. After that, whatever happens, it becomes a fact. Now, what is the responsibility of the auditor with respect to the facts? Was to respond appropriately to the facts that become known to the auditor after the date of auditor's report. If that has been known to the auditor at the time of the date, may have cause to amend the audit report. Okay. So you have to respond appropriately for the facts. But whether do you, as an auditor, you have a requirement to obtain additional audit evidence? Or whether have you a requirement to, kind of perform additional procedures? Answer is no. Otherwise, what will happen is this fact will go on till years and years. So whatever happens after the issuance of audit report will remain a fact. This year, next to next year, till how many years auditor will keep open the watch in his audit report? if I say auditor has to look for these kind of things, let's say in this particular example that we were talking about, summary financial statement. Let's say, for example, instead of 25, I am saying it is 26. So in this scenario, auditor has to check all the events for the 1 year. Additionally,
No, sir.
But that may not happen because by that time another year has passed and another audited report will be available.
okay,
So
I'll modify the date then. Let me give you the another date. So the date is, let's say, 31st August 26. Till that time, new audit report or the financial statement for the annual next year is not available. Till a very big period. I can make it July also. Till very big period.
still a fact can be disclosed.
So in this scenario, again, specifically, there are two things we need to understand. Is this an event happening between these dates? So let's say the date 39/25, 31/8/26. Now you need to understand few things over here. Number one, let's say this is my timeline. Okay. Is this event happening between this, from this date to this date? If yes, don't do anything. Event happening here not require adjustment. Not require adjustment. Because I will put a line in my audit report saying that events occurring after my audited financial statement till the date of summary financial statements are not reflected here. So I will state that the summary financial statement and audited financial statement do not reflect the events or the effects of the events that have occurred subsequent to the date of auditor's report on the audited financial statement. I will specify this in my audit report. And the best example to show you is this document. So I think we let me go back to the audit report that we discussed. Yeah, this was the audit report that we discussed. Now here they are preparing a lot of financials. They have compiled a lot of financial statements, but they have entered one specific line item, a specific line. Let me show you that. Yeah. The restated financial information does not reflect the effects of the events that have occurred subsequent to the respective dates of the reports on the audited financial statement and audited special purpose interim financial statement as mentioned in above paragraph 4. That means, although I am covering the report, if you see the financial statement covered in this particular report, 1, 23, 25, 24, 24, 25, like March, June. Okay, a lot of things are covered in this. From 23 to 25, everything is covered. In this case, it becomes difficult for the auditor to consider so many events that have occurred from 23 to 24 to 25, even when they are preparing a restated statement of assets and liabilities. Sorry. So in this case, it is not feasible for the auditor to consider all these events. And that's why this kind of statement is necessary to reflect the leaders that events are not considered. If there is any adjustment which is being made, it can be as per the, what you can say, applicable criteria. Recalculations can be there, but we are not making any adjustments. We are only and only doing a recalculation or summary in our case, but nothing else. That's why we have this line also. It should not be construed reissuance, redating of any of the prior year audit reports. Otherwise, it will become reissuance of the prior year audit report if you consider additional things. And what will happen is, same financial statement, two different opinions, just because of the events, which is not permissible. So as a result, do not consider the events. Provide the disclaimer rather. Provide disclaimer, not disclaimer per se. You will understand disclaimer of opinion. Provide, you can provide a statement that events are not considered. Clear?
Clear.
Now, what if an event which was of before 3925, let's say the event pertained to 3825, which you missed out earlier. You missed that event earlier. Okay. Now, when you're preparing a summary, you came to know, oh, I missed out an event earlier, which has had an impact on my audit report. What you will do? What you will do in that case? So after a year, when you are preparing summary financial statement, at that time you realize, oh, I missed the event which was before the date of audit report. Anyone? What you will do? No? That particular event will fall under this category. You can say that that particular event will fall under this category. Respond appropriately to the facts. Auditor that become known to the auditor after the date of audit report, that they had been known to the auditor at that date may have caused the auditor to amend the report. So that will come under this particular category. You have to respond to that fact. If it is before the date of audit report, you are coming after, you are getting aware after the date of audit report. That we have discussed in SA 560. An auditor should not issue a report on the summary financial statement till that time you respond to that. respond and then issue summary FS report. Clear?
Clear.
Okay. So that is the important part that we need to understand for the events, because these kind of events will be, there with respect to the report, and accordingly we need to understand how we need to deal with these particular kind of events. Second thing is modification. How you will deal with the modification? How you will deal with the modification? Let's say original audit report contained a modification. It was a modified opinion. How will you deal with that in your summary financials report? I am giving a reference to the old, but my old report even was qualified opinion. Okay, I'll give you an example. Mm, We'll discuss one example. Let's say auditor report contained qualified opinion on impairment of FA. Okay, that was the auditor's report having qualified opinion on impairment of FA. Now you are preparing report on summary FS. The question, first thing is, I'll give you some information. One, summary FS are appropriate. Appropriate means are appropriate summary of audited FS. That is an appropriate summary of audited FS. Second, criteria is good to go, like acceptable, and not misleading. Now tell me, how will you deal with this qualified opinion in this report? How will you deal with this qualified opinion, modified opinion?
We can state it in our auditor's report about that report.
But if I state a qualification in my report, but my report is on the summary financial statement, and summary financial statement are appropriate summary. It is perfectly as per the criteria. Should I include a qualification of the audited FS in my summary FS when my summary FS is appropriately fine? What do you think? Anyone? Anyone? No?
Basis for qualified opinion should be mentioned in the report of SFS.
And any specific reason for that? Why it should be mentioned? What is the logic behind mentioning that?
Otherwise, it would be misleading.
Absolutely correct. If I do not mention about this qualification, then this particular thing will happen for sure. That's why the first reason was that please provide the audited FS and the complete set so that the person can understand that whatever complete set it is, what it was, whether any qualification was there or not. And that's why in this, here in this report, I'll show you something. See, emphasis of matter paragraph. So auditor's report issued by us dated this included the following emphasis of matter paragraph which has been reproduced below. Again, auditor reports dated issued by us dated this included this paragraph. So unless and until you do not issue this particular information in your report, you will not be able to provide appropriate report, or it may become misleading for the reader of this report on the summary financial statement. As a result, it is necessary to include a reference of that. So, so if it contains these paragraphs, if your report, original audited report, contains a qualified opinion, contains the emphasis of matter paragraph, other matter paragraphs, material uncertainty relating to the going concern, key audit matters, a statement of uncorrected misstatement in accordance with the SH 720. What is this one? Can anyone tell me what was this? A statement describing uncorrected misstatement of other information. What other information? Anyone? What was this? No? Okay. So other information means the annual report at that point in time. If there was a uncorrected misstatement in the annual report, that was supposed to be like, if that is was not rectified. So we have a statement as per as SA 720, remember? So that statement we are talking about. And you need to state in your own report. If it was a qualified opinion, then the basis of qualified opinion on the audited financial statement and the effect of that on the summary financial statement. If your FA was wrong in the audited FS, it will be wrong in the summary FS. You need to state that. If it was emphasis of matter paragraph, other matter paragraph, going concern, material uncertainty, okay, then you need to provide that and the effect of that on the summary FS. If it was uncorrected misstatement, okay, included at that point in time as per the SS 720, okay, then you need to provide that information that is included in the document containing summary FS. Is that the same document, okay, or the effects of that on the summary FS? What is the effect of that on the summary FS? All these things you need to specify in your report. Clear? So these things will be specified in your report if they are there in the original report. Now, we discussed here qualified opinion. What if it is, what if it is adverse or disclaimer of opinion? We are talking about qualified opinion. What if it was disclaimer of opinion? What if it was adverse opinion? Anyone? Yes, no. What you will do?
In this case also we have to state that in the audited financial statement there is adverse or disclaimer of opinion.
Sorry. But how you will talk about the effects of that on your opinion? Like everywhere we are saying that, we need to specify the effects of that on our opinion. How we will discuss that? How you will discuss the effect on your own opinion?
So because of that we cannot give the effect of it. It is adverse and disclaimer.
Yes, absolutely correct. It is adverse or disclaimer. Any which ways, your opinion on the audited FS was not appropriate. Means not appropriate in the sense you said that the audited FS are not appropriate. How can you issue an opinion on the summary FS? When your audited FS contain the adverse opinion or disclaimer of opinion, state that the auditor's report contained adverse opinion, disclaimer of opinion. Describe the basis and state that because of that, we are not able to express. It is inappropriate to express an opinion on the summary FS. Means do not issue opinion on summary FS. Do not issue opinion on summary FS. No, do not. Otherwise, it will become misleading. If you'll issue an opinion, remember SA 705, same set of financial statement cannot have two different set of opinions. Like you cannot issue adverse opinion or disclaimer for opinion with other type of. If you do that, it will become in this scenario. Like one side you are saying it is an adverse or disclaimer. Another side you are saying no, summary financial statement are fine on all material respect. It will become a very big problem. So do not issue any opinion at that point in time. And if you identify any modification in the summary financial statement, then you modify that. So if there is a problem in the summary financial statement, you need to issue a modified opinion on the summary financial statement. That yes, in the summary financial statements are not consistent in all material respect or are not a fair summary of the audited financial statement, and whatever it is, you will need to provide that opinion. So if there is a problem in the summary, give opinion on the summary financial statement, modified, adverse, or whatever it is. But if your original audit report contained adverse or disclaimer, do not issue an opinion on the summary FS. Okay. And there are basic elements which are required to be there in a particular audit report, the minimum elements. The audit report on summary FS, it should contain these minimum elements: title, addressee, identification of the summary FS on which the auditor is reporting. You need to identify each summary FS, identification of the audited FS from which the summary FS is prepared, expression of opinion, what opinion you are giving, a statement indicating that the summary FS do not contain all disclosures. That's why it's a summary FS. And reading the summary FS and the auditor's report thereon is not a substitute for reading the audited FS and the auditor's report thereon. This is one of the statement and specific requirement that you need to mention. If required, if there are if required, if there is a gap between the summary FS and the audited FS, then you need to state that the financial statement, audited FS, and the summary FS do not reflect events occurred subsequent to the date of auditor's report. If there is a gap, then you need to provide reference to the auditor's report on audited financial statement if it is a unmodified opinion. If it is a modified opinion, then you specify and provide the reference to that. Management responsibility, auditor's responsibility, okay, and then the signature, date of audit report along with the UDIN. Okay, this is how what you need to prepare the minimum content of the audit report. Any doubt? Now, there are two things we need to understand. Number one is a comparative. If summary FS contains a comparative, if summary financial statement contains the comparatives which are not audited by you, which are audited by some other auditor, and you are taken from, like, a lot of times we have that previous year or financial statement had been audited by the predecessor auditor. That is the other matter paragraph we specify in the audit report. Now, if that paragraph is there, are you required to report? Yes, because it's another matter paragraph. We should report that it contains some comparatives, and comparatives were audited by some other auditor. Okay, and you are including that. So, if summary financial statement contains comparatives that were reported by another auditor, any which ways you have a other matter paragraph in your own audit report. Based on that, provide that the auditor's report on the summary FS shall also contain the same matter. You need to also provide in your own FS, some report on summary FS. SA 720. That is, you check information in other information along with the audited FS. So you compare the other information with the audited FS for the material inconsistency. Yes or no? In case of audited financial statement, you apply SA 720. Similarly, we need to apply the same concept over here in case of summary FS. Okay, that is the information in the document containing summary FS. If summary FS is given in a document, and if there is other information in that document, then you need to consider whether there's a material inconsistency, same as SA 720. Okay, that consider if there is a material inconsistency. If yes, then determine whether it is required to be revised, whether your summary FS is required to be revised, or whether other information in that document required to be revised, or how it is, and accordingly take the appropriate action. Okay, So that, and the last part, that is there is the timing on of work and subsequent events that we have already discussed. So as I said, you need to include a note that they do not reflect the events that had occurred subsequent to the date of auditor's report. But if auditor becomes aware of the fact that was existed at the date of auditor's report, but of which auditor was previously unaware, in that case, you should not issue. Okay, auditor report on summary financial statement should not be issued, shall not be issued until the audited FS are dealt as per 560. That is the facts that the auditor is becoming aware after the date of audit report, which if known earlier would have caused the auditor to amend the audit report. So you can point here, refer point B of objective of SA 560. Okay. So that was the SA 810 that we discussed, the report on the summary FS. Any doubts? Any doubt?
No, sir. Thank you.
Okay. If no further doubts, then what I propose is let's take a quick 10-minute break. After the break, we'll solve some questions on this topic and we'll start the chapter number 9. Okay, let's take a quick 10-minute break. Thank you. Hello everyone. Let's continue the session. Now we will take some questions on this topic so that we can understand how to answer. Okay. So let's take some questions. We will read this question first.
Apex & Co. Chartered Accountants are the statutory auditors of Zenith Infra Limited, ZIL, a listed company, for the financial year ended 31st March 2025. During the audit of the complete financial statements, the audit team could not obtain sufficient appropriate audit evidence related to a complex, high-value overseas joint venture which is material. Management was unable to provide the necessary records or access to the component auditor's work papers, citing a confidentiality clause in the JV agreement. CA Apex, the engagement partner, concluded that the possible effects of this inability to obtain sufficient appropriate audit evidence are both material and pervasive to the consolidated financial statements. Accordingly, Apex & Co. issued an auditor's report on the complete consolidated financial statements dated 15th May 2025, containing a disclaimer of opinion. Subsequently, the management of ZIL prepared a set of summary financial statements derived from the audited financial statements for inclusion in the company's annual report. On 20th May 2025, the management approached CA Apex with a request to issue an auditor's report on these summary financial statements. Management contends that since the summary statements are highly aggregated, the issue related to the single joint venture is no longer pervasive, and therefore, the firm should issue an unmodified opinion on them. As the engagement partner, evaluate management's request and advise on the firm's responsibilities and the specific reporting requirements for the summary financial statements in accordance with SA 810.
Okay. So this was the question wherein there is already a audited FS, an opinion has been issued on audited FS, which is disclaimer of opinion. Now there is a summary FS. They want auditor to issue another opinion. And what should be the auditor's responsibility? Take a minute, read the question again, and then try to answer. Okay, so tell me, what should be done in this particular scenario?
Since the opinion on the audited financial statements is disclaimer of opinion, the auditor should not express an opinion on the summary financial statements because of this disclaimer of opinion.
Okay, good. Anyone else? Okay, just one doubt here, question that has been asked is when it means the complete consolidated financial statement, it includes the standalone also. Okay, includes standalone also means the complete set which was there, complete consolidated financial statements like consolidated, standalone. So everything over there they issued a disclaimer of opinion. Anyone else with a different answer or something more to add? Okay, how will you write the answer here? How will you write the answer here? Anyone? So basically, answer will be it contains a disclaimer of opinion. Yes, we cannot issue opinion on the summary FS because it's a disclaimer of opinion. Rather, we need to specify that okay, disclaimer of opinion. As a result, these are the things we need to specify in our report that this was the audited FS, this was the opinion, basis of the opinion, and as a result, it will be inappropriate to issue an opinion on summary FS. So again, first we will refer to SA 810. We will provide what is the requirement of 810 with respect to adverse opinion, disclaimer of opinion. We will analyze the situation, and then we will give the conclusion that okay, we will identify the summary FS. We will refer to the auditor's report. We will state that the auditor's report contains disclaimer of opinion. We'll describe the basis for disclaimer of opinion, and we will state that it is inappropriate to express an opinion. And we cannot issue an unmodified opinion in this particular scenario. Clear? Straightforward that we have discussed. Any doubt?
Clear, sir.
Okay. Let's take one more question.
URCA. Mehta, the engagement partner of Mehta and Associates, responsible for the audit of Galaxy Pharmaceuticals Limited. GPL, a listed entity. Your firm has completed the audit of the complete financial statements for the year ended 31st March 2025 and has signed the unmodified auditor's report on 28th May 2025. The management of GPL has prepared a set of summary financial statements derived from these audited financial statements. They intend to immediately publish these summary financial statements on 1st June 2025 via a press release and on their website's homepage. However, the complete annual report, which contains the full audited financial statements and your firm's audit report thereon, will only be mailed to shareholders and filed with the stock exchanges on 30th June 2025. The management of GPL has requested you to issue your audit report on the summary financial statements on 30th May 2025, so they can include it in their planned press release on 1st June. As CA, Mehta, evaluate the management's request. Discuss the auditor's responsibility as per SA 810 regarding the timing of the auditor's report on summary financial statements and the availability of the full audited financial statements to the intended users.
Okay, so here they want to issue a summary financial statements through a press release. Okay, and which will provide the details and everything. And they want to issue the audited financial statement on some other date, and all these dates are given. Take a minute, read the question, and then tell me what should be the appropriate way. What is the responsibility of the auditor in this scenario? Anyone?
Yes, sir. Summary financial statements cannot be issued before the audited financial statement. So it is not appropriate.
Okay. Anyone else with some different answer or something further to add?
Here, the summary financial statements are issued to be issued on 1st June 2025, which is after the date of the audited financial statements. But it is too close to the date 20th May. The auditors may not get the time to get the sufficient appropriate audit evidence for the summary financial statements. Although they can issue it on 1st June because it is after the auditor's report. But how will they audit for the want of this sufficient appropriate audit evidence within a day or two?
Okay. See, remember when we discussed one thing, that along with the summary financial statement, there is something else to be shared. That is the audited financial statement. And you need to make sure that the audited financial statements are available with the summary financial statement, and management accept that responsibility. Here in this particular scenario, the complete annual report, which contains the audited financial statement, will only be mailed with the and filed with the stock exchange on 30th June. If that is the case, when you are issuing a summary financial statement and the report on that on 1st of June, do you think the readers, stakeholders of the summary financial statement will have the access to the complete audited financial statement? Even though you have signed an auditor's report on 20th May 2025. One may question that we have signed it before. But the question comes is it available to the readers?
Not available, yes.
Yeah. And what we discussed was we need to make sure, one of the procedure was we need to make sure that that should be available. And engagement acceptance requirement included that it should be made available without undue difficulty. So if auditor becomes aware of a fact that the auditor report on the audited financial statement is not going to be issued before some audit report or before report on the summary financial statement is issued, in that case the auditor shall not issue a report on summary financial statement. Or he should ask management only circulate with the summary financial statement, do not circulate it before. Otherwise, what will happen is it will lead to a scenario where users will not be aware, like, okay, what is the summary financial statement made from, where are the audited financial statement, and they will not be able to understand this particular scenario. Clear? So in order to write the answer, what I'll do is, again, suggestive answers, like which you can have another type of answer also, not an issue. But this is something, I think would be appropriate. That is essay 10, you specify that. You specify what should be the date of the, auditor's report on summary FS. Okay. Then specify what is the requirement that it should be available without undue difficulty. Okay. And we need to specify in our report, okay, that audited financial statements are available or not, from where it has been made available, how they are made available, all these things we need to specify. Okay, in the current scenario, the date or the circulation is going to be after 30th. Okay, after 30th, not before, and you are issuing on 1st. As a result, you need to advise to the management, please make sure, okay, this is available. This is not ideal situation. You need to make sure that, the report should be available with that. Otherwise, what will happen is it could be misleading. Okay, it could be misleading for the users. Okay. Otherwise, what will happen is it may lead to confusion for the users. Now, uh, there is one more thing that I need to discuss specifically over here, which is, what if the entity plans to, share the financial statements and auditors report on that later on, or entity, is not planning to share that particular report along with the summary financial statement because of the law. So auditor may be engaged to report on the financial statements of the entity, okay, while not engaged to report on summary financial statements. And later on, they may ask him to make the summary financial statements, okay. And they may ask, okay, like, law does not permit us to circulate with the audited financial statement together with the summary financial statement, or they want to include the summary financial statement in a document where the audited financial statement is not there. So in that case, what should be done? So you need to understand and evaluate the situation, whether it is something which is restricted by law, whether it is something, which is law doesn't allow it, or it is, the management which is taking this particular decision. And accordingly, we need to decide. Okay. And we can include a statement that this engagement is not conducted in accordance with this essay. If any of the thing out of this essay we are not required, we are not able to comply, but still we have to undertake this engagement because of the law. Let's say law requires auditor to issue this report, but somehow we are not able to comply with the requirement of this essay. At that point in time, we should not report in our report on summary FS that this summary FS engagement, report on the summary FS, is conducted in accordance with this essay 810. There is one of the requirement for that, but that's a very rare case scenario where auditor has to report in a way that it has not been conducted in accordance with this essay. Okay, but otherwise, advise management, and if you are not able to, if management is not able to share, do not issue or do not accept the engagement. Clear?
Yes, sir.
Doubt? Okay. If no further doubts, let's proceed to our next chapter that we have for today. We are going to start chapter number 9, that is related services. Now, when I talk about related services, here the standards that we are going to discuss are two important standards, And when I say related service, it's the standards on related services. These are known as SRS. They are not SA. They are not SA. SA is the standards on auditing. Okay. But when I talk about SRS, it is the standards on related services. Here, what we need to understand, what is the related service first? Can anyone tell me what is the related service? What is a related service? What do you mean by related service?
It could be preparation of financial statements.
Okay. What else? So this is something we need to first understand, very important term. Before understanding any of the SRS, we need to understand what is related service. Again, anyone would like to add something to this? What is the related service?
In this, we have to do the agreed upon procedure, whatever the client says means about that.
Okay, agreed upon procedure, yes. But how it is different from audit?
And these essays are not applicable, sir, because it is not audit.
Essays are not applicable, it is not audit. Okay. But again, the question is how it is different from audit. Essay is not applicable, fine. Why we need to have a separate standard? What is the difference between the audit and a related service or agreed upon procedure?
Here we are doing certain activities which are not audit in the nature of audit. For example, inventory valuation or compilation or preparing financial statements, balance sheet, profit and loss account.
Yes. So if I have to summarize related service, you can say non-assurance engagements. Non-assurance engagement, where you are not issuing opinion, neither limited nor reasonable. Okay, we have, if I talk about, we have, different kind of ends with respect to the opinion. Okay, so if I talk about with respect to a particular opinion, let's say this is the, let me draw a graph for you guys. Okay, so from higher to lower, okay, we have here absolute opinion, absolute assurance. Somewhere in between, we have a reasonable. Somewhere also down the line, we have a limited assurance. And somewhere down the line, at the bottom end, specific, where, it is zero. So we have non-assurance, no assurance. So when I talk about this no assurance engagements, at that point in time, I apply SRS. For reasonable assurance engagement, I apply SA or SAE. We will understand what is SAE later on when we will go to that particular chapter. And for the limited assurance, for the limited basically assurance engagement, okay, you can say again, we also have a SAE. Some of the SAE is also there for the limited assurance engagement. Sorry, not SAE, my mistake. It is SRE. SRE is there for the limited, you can say some of the limited, but we will understand that in much more detail. As of now, you can understand reasonable assurance, SA, SAE, SRE, or SRS, like this way. Okay. Now, when I talk about SRS, no assurance or non-assurance engagement, this is sometimes referred also as an agreed upon procedure. Why agreed upon procedure? The reason, because the foremost reason for saying that is an agreed upon procedure is that whatever you are saying, I will do. I'm not applying an opinion. I'm not issuing an opinion. I'm doing just what is agreed between us. It should not be treated as an opinion. I am doing what is just agreed between the client and the practitioner. Clear? That is the agreed upon procedure, which is SRS.
Sir, in absolute assurance, what will come?
See, absolute assurance are kind of, see, again, it's very difficult to issue absolute assurance. Reason because of the inherent limitation. So always there will be inherent limitation and you cannot issue absolute assurance. And if there is any assignment, then I would say uh, something similar to the, you can say either certificates or even, a certificate where 100% report you have to issue that it is done, it is there and there. Assurance, absolute, not true and fair. So some special certificates could be there for the absolute assurance, but not the audit.
Yes, thank you.
Okay. So let's understand SRS, first one. And in this particular chapter, we are going to cover two SRS. In this particular chapter, we are going to cover two SRS. One, SRS 4400, engagement to perform agreed upon procedures with respect to the financial information. Second, 4410, that is compilation engagements. Okay. So related service contains two SRS, 4400 and 4410. Okay. Now, let's understand first SRS 4400, engagement to perform agreed upon procedure. We understood, like, what is agreed upon procedures? Like, whatever you say, we agree, I will perform. Agreed between the practitioner and the client. That is the agreed upon procedures. Okay. That is the agreed upon procedures. In this particular type of engagement, when I say engagement to perform agreed upon procedure, the auditor is engaged by the client to issue a report on the factual findings based on whatever elements or whatever procedures have been agreed. Okay. And here the auditor performs the procedures which are, let's say, maybe filing of tax return, maybe doing some recalculations, but not issuing any assurance. At the end, I am not issuing any assurance. Sorry. Here, assurance will not come into the place. It's not an opinion. We are not issuing an opinion. And at the end, what I issue is the report. Okay. What I issue at the end is the report, not the opinion. Remember, that is the difference between SRS and other that we will discuss later on or we have discussed till now. We are not issuing any opinion. Now, I will be using the term auditor throughout this SRS. Okay, I will be using the term auditor, but that does not mean that person is actually an auditor. So the term auditor is just to imply and it's to show that the person who is performing the services, he need not necessarily to be an auditor of the entity. So although I'm using the term auditor, you may understand a chartered accountant. Clear?
Yes.
Okay. Now, when I talk about SRS 4400, agreed upon procedures. What about all the essays that we have understood till now? Will they be applicable here? Will you apply those essay in this particular engagement?
No.
Some. For example, let's say written representations. For example, let's say audit evidence. Will you apply those essays? 560, 570, going concern. Will you apply that?
No, sir.
Absolutely correct. So here we will not apply essay. However, we will discuss a lot of things which are similar to essay. So we are not going to apply essay because it already contains a lot of its own requirement which is similar to essay. We are any which ways, if we are performing agreed upon procedure, so the procedures, engagement related things and everything, the concept is going to remain same. The concept is going to remain the same. Only the difference part here will be that how we are performing it, what procedures they are. That's it. Okay. Now, the first and the foremost thing when you are taking this particular type of engagement, as I say, essays are not applicable in this scenario. So how will you accept this engagement? What you will do at the time of acceptance? Before accepting, what you will do? Before accepting the engagement, what you will do?
Issue an engagement letter.
Okay, issue an engagement letter. But any other requirement to be complied with, the way we do in essay 210, understand the applicable financial reporting framework, criteria, anything like that here?
As a CA, ethical requirements we have to follow, sir.
Absolutely correct. Although essay is not applicable, but code of ethics will always remain applicable. So before accepting, make sure you comply with code of ethics, that is ethical requirements. Now, what were the ethical requirements? Anyone?
Integrity, objectivity, professional competence and due care, confidentiality, and professional conduct, professional behavior, I think.
Behavior. Yes.
Principles of this.
Yeah, you can say independence also. But now the question comes is, are we required to comply with the independence over here? It is engagement to agreed upon procedure. Do we need independence? Do we need independence over here? It's not an assurance engagement.
Yes.
Absolutely correct. We don't need independence over here. However, it is, again, the question comes is from where the independence requirement actually comes. See, independence requirement is given in the code of ethics. Over there, you are required to comply with the independence requirement. Okay. So basically, when if you go to the code of ethics, over there is a section for the independence requirement, and that is applicable to everyone. and code of ethics is applicable to everyone. So as a result, you need to also follow the independence requirement. Now, in this particular type of engagement, independent is not necessary. Independent is uh, not mandatory, I would say. Okay, independence is not mandatory. However, it is necessary to state whether you are independent or not. Fine, not mandatory, but reporting on independence is mandatory. So if you are not independent, specify. If you are independent, specify. Stating is necessary. Maintaining independence could be, could not be. Okay. So basically, when I talk about ethical principles, integrity, objectivity, professional competency, confidentiality, professional conduct or behavior, technical standards that you have to follow, all there. But independence is not required for agreed upon procedures. However, where the auditor is not independent, state that fact in your report that you are not independent. Clear? Okay.
Yes.
Now, okay. Now, an important question comes in this particular scenario is that agreed upon, ethical requirements followed. What next we need to do? What next we should do after following the ethical requirements? Anyone? What is the next step?
Planning.
Before planning? After independence or after, sorry, these ethical requirements?
Acceptance of terms of engagement.
Yes, very good. So you need to accept the terms. What to do? What is the agreed upon procedure? What do you want me to do? What should be the outcome? How do you want the outcome? How do you want the report? So all those things you need to agree. So define the terms of engagement. Okay. The understanding should be clear about the procedures and the conditions of engagement, which may include like what is the nature of engagement? What do you want me to do in agreed upon procedure? It's no assurance. I will not issue any assurance that you need to communicate. Purpose of the engagement. What is the purpose? What is the financial information upon which I need to apply the agreed upon procedures? Nature, timing, and extent of the procedures. How much procedure I need to apply? How much time? Like, what is the basically, like by when you need this particular report or outcome, and limitation on distribution. To whom you will circulate, to whom you will not circulate. So these are the things you need to agree before you enter into a agreed upon procedure. There is an example given over here in appendix 1 of the engagement letter. Okay, so let's go and see. This is the example which is given in the appendix 1 of the SRS as an engagement letter. So if you see this engagement letter, it says that in reference to the latest this, appointing this, identifying the items like on which the agreed upon procedures are required to be performed. This engagement will be conducted in as per the SRS. Describe what will be performed. Okay, and this is how the engagement letter is. Okay, so one example which is given, but yeah, like you need to specify all these things. What you are going to perform, it should be written in the engagement letter. How the outcome is going to be there, it should be written in the engagement letter. And accordingly, once you understand what is required to be performed, Go for planning. Perform the plan. Perform the planning procedures. Once planning is done, document. Documentation will always be there. Same as essay. What is the documentation essay?
230.
Yes, 230. But documentation requirement is already there in all the essays. So yeah. And once you do the documentation, you do the planning, perform the procedure, collect the evidence or whatever agreed upon procedure it is there. It may include inquiry, it may include recomputation, comparison, observation, inspection, confirmations, whatever it may be. Whatever it may be, it may contain all these things. So whatever procedures it is there, you need to plan, you need to perform. Once that is done, the important part now comes reporting. How to report, what to include in the report is the very important part. When we are not giving an opinion, how will you draft the report? Anyone? How will you draft a report if you are not giving an opinion? Anyone? No? Okay. Will I be including opinion paragraph here?
No, sir.
Then how will you say that? Like what you will say, what procedures you will perform, what is the outcome? In which way you will provide the outcome?
It's not assurance and it is factual finding.
Assurance, factual finding. Okay. Yes. Basically, the SRS also provides a minimum item in the report. Like what should be the minimum item? Okay. And what should be, like the appropriate things that you should include in the report. Okay. So what SRS says is that these are the minimum things that you should have in your report, which is title, addressee, identification of the financial, non-financial information on which the agreed upon procedures have been performed, statement that the procedures were performed were those agreed upon with the recipient, with the management basically. So these are the procedures which were performed, which were agreed. Then a statement that this engagement was performed in accordance with the SRS. Identification of the purpose for which the agreed upon procedures were performed. Why you want to perform these procedures. A listing of the specific procedures performed, what you performed in actual. Description of the auditor's actual finding. After finding or after performing the procedures, what is the outcome? Let's say someone asked you to perform the procedures and calculate the expected credit loss for them. You perform the procedure. Now, what is the outcome? After performing the procedure, what is the outcome of that particular calculation of expected credit loss? So here, first of all, I will specify the procedures that were supposed to be performed was calculation of provision as per ECL method. Then I will say what is the provision, final provision, outcome, the factual outcome. Then a statement that the procedures do not constitute an either or an audit or a review and no assurance is expressed. This is very important. This is very important. You have to specify that this is no audit, no review. Why? This will say no assurance. A statement kind of saying this is no assurance. Then a statement that the auditor had performed additional procedures. If you had performed like like if you performed an entire audit instead of agreed upon procedure, or if you performed a review, other matters might have come to our attention that were reported. That means if we performed audit, other matters might come which we might have reported at the time of audit, but now we are not performing audit, so we are not reporting those matters. So a statement that if auditor performed additional procedures, other matters might have come to their attention, but as of now we are not reporting those matters. Okay, so that is one thing. And another statement is report is restricted to those parties have agreed upon the procedure. Like, whatever you have agreed in the start, okay, that report is restricted to that particular parties. You should not be distributing to someone else. Then a statement that it does not extend the entity's financial statement, or it does not extend to any other thing apart from to which it is being performed. Let's say you are performing account receivable provision calculation. So it is on the provision only, not on the receivables. It is not on the sales. So to what it is related to. Then the date, place, signature, plus you done. Clear?
Clear.
So these are the minimum things that you need to specify in your report. And when I say minimum things, means minimum things that it should be there in your report. There is no exception to this. You can remove unless and until that particular thing is not applicable. Any doubt till now?
No, sir.
Okay, let's go to the study material. So as we discussed about integrity, objectivity, these are the general principles that you need to comply with in agreed upon procedures. You need to define the terms of engagement, how, what, when it should be there. Okay, and the matter that you need to state in your engagement letter, that is nature, purpose, okay, identification of financial information, nature, timing, and extent of the procedures, and limitation. So NPIPL. This is something you need to provide in this, in the engagement letter at minimum. Okay. Again, you need to plan, you need to perform the procedures, whatever it is. Then you need to report. These reporting parts we have just now discussed. Then documentation. That's it. That's your SRS 4400. Any doubt? Again, any doubt on SRS 4400?
Can an employee also conduct this SRS if he is a chartered accountant? Because no independence is required.
Yes. So the question, your question is valid. Now the point comes is, are you performing in an individual capacity or are you performing as an employee? So one thing is that are you performing in an individual capacity or are you performing as an employee?
As an employee,
So if you are performing as an employee, then SRS will not be applicable. I'll tell you the reason why. Your terms of engagement, your outcome, everything is already there in your employment agreement. You already agreed in your employment agreement what you are going to do, what you are going to perform. It is not an SRS. But let's say, for example, if you are performing in the independent capacity, sometimes it happens that you are issuing a report in the independent capacity. Very rare case scenario, being an employee, usually company does not allow. But let's say if somehow, if you are doing that, in that case, the problem will come upon these fundamental principles: integrity, objectivity. So how you will say that objectivity is there, biasness is not there, integrity is there, professional competency, due care, and all those things will be there. Right? Objectivity will be very important. How can you say you are not biased? Independent is not requirement. Objectivity is still required.
Yes, biasness would be there.
So when you are not able to comply with the ethical principles, fundamental principles, you should not perform that engagement. And if you see code of ethics also, if you go to the code of ethics, there is a separate section for the things you may perform as an chartered accountant in service. So there is a section 2 of the code of ethics which governs you how to perform or how to carry out your duties as a professional accountant in service. What you should do, what you should not do. For example, preparation and presentation of financial information, which is section 220 of the code of ethics. That will be applicable. In that, a lot of things or a lot of points are included. Any doubt? Any other doubt? Pretty much straightforward, simple standard. Nothing complex is there in this. Just the part only here, which is, which we need to understand is that what SRS is, like what, agreed upon procedures are and how they are basically relevant here. Okay. So that is the only part that we need to understand. I may have one draft report, like illustrated report of SRS that will be really helpful for you guys to understand. Let me share that. Okay. Again, it's an illustrative report, draft report. It is not an actual report. Okay. Now, if you see this particular report, now this is the independent practitioner's report on the factual findings. Okay, what it says that it's an engagement to perform agreed upon procedures regarding financial information as per the SRS. Solely to assist. The procedures were agreed with you solely to assist you in evaluating the validity of account receivable balance. These procedures performed were only those agreed upon with the intended users and are described below. So some procedures that were agreed that we specify in the report. Agree with the AR trial balance, match major customers to the trial balance, external confirmation, reconcile exceptions, aging recomputation. Okay. Then factual findings. Once you perform your procedure, then what is the factual findings? Our factual findings from applying the above procedures were like agree. The total balance agreed is this much. 25 major customers are there. We requested 30 direct confirmations as received, 26 valid replies. 7 items where customer replies did not agree to client records. this is the exception kind of, whatever exception may be. Customer A, customer B, exceptions, aging recomputation. So what is the recomputation? So all these things. And other statements like this engagement was performed in SRS. This do not constitute an audit or review, and no assurance is expressed. Had we performed additional procedures or an audit or a review, other matters might have come to light that would have been reported. Restriction on use that intended only for the parties who have agreed the procedure. Limitation that it relates to the specified items or does not extend to the entity's financial statement as a whole, and the signed signature and all those things below. One example for the agreed upon procedure report. They are pretty much simple, straightforward. Okay. Okay. Now, the next thing that I want to discuss basically is the next standard. Again, this is part of the SRS. Let me share the screen. This is SRS 4410 compilation engagements. Okay. Now this is specific one. SRS 4400 was a general. SRS 4410 is a compilation engagement. Now, first we will understand what are compilation engagements, and then we will see some portions of this particular compilation engagement over here. Okay. So, what is compilation engagement? Can anyone tell me what is compilation engagement? If you have guys gone through this particular standard or the chapter, what is compilation engagement? Anyone?
Preparation of financial statements.
Preparation of financial statements. Okay, great. Anyone else? What is compilation engagement?
It's assisting the management to compile the information, means financial statements.
Yes, very good. So when I talk about SRS 4410, it is the assisting the management. It's also written over here in the screen also, but it is assisting the management in preparation and presentation of the historical financial information. Understand that. I am talking about historical financial information. Is there any other financial information apart from historical?
Prospective financial information.
Very good. Prospective financial information. So, can I apply this SRS to the prospective financial information?
No.
Or non-financial information? Basically, there is no restriction on that. So, compilation engagements for financial information other than the historical financial information and compilation engagement for non-financial information can be performed under this standard after making some changes or necessary adaptations. But yes, you can do that. So there is no restriction per se that only historical financial information should be there, first of all. But yes, primarily we will be discussing compilation of the historical financial information, where you assist management in preparation and presentation of historical financial information. Now, when I talk about this SRS 4410, historical financial information, what do you think will be the outcome? How will you issue the report? What will be your final report here? Anyone? What will be the final outcome over here? What you will write in your final report? Let's go to the direct reporting part, because let's understand from the reporting perspective first, and then we will come to the rest of the things also for understanding. What you will report here? How will you issue a report? That we have presented, we have assisted the management in preparation and presentation of historical financial information, and there is no error in that. How the reporting will be done? I think you guys have not gone through this standard in detail as of now, because that's where we need to understand that it's still an engagement. Okay, this is still an engagement. When I say engagement, that means report will be there. Some might get confused with, okay, it's a compilation engagement where I have to prepare and present the financial information. We'll do that, matter over. No, a report is there. We will discuss the report. The practitioner's report that to be issued for the compilation engagement in writing, and what should have as a minimum elements that we will discuss. But a report is there. Number two, we will use the term practitioner over here, not the auditor. The way we have in SRS 4400, we are talking about auditor, but not necessarily it was the auditor of the company. So although we were using the term auditor, it does not mean actual auditor. Here in SRS 4410, we are referring to a practitioner. Now the question comes is, can an employee perform this particular service? Can an employee do preparation and presentation of historical financial information for the company and comply with SRS 4410?
No, because he is not a practitioner.
Yes, absolutely. So here, when I say practitioner, it is the person who is into the professional accountant, into the public practice. So if we go to the Code of Ethics, Section 3 of the Code of Ethics talks about professional accountant in public practice. Now, basically, it talks about professional accountant, okay, in public practice and independent standard. It contains more than public practice, but yeah, it contains some portion on the professional accountant in public practice and the independent standards. Some of that particular part in that. So over there, I'm referring the practitioner, not the professional accountant in service. Okay. So that is a compilation engagement. Now, why this is required to be performed? Like, what will be the reason to perform this engagement? Why do you think, someone will ask you to perform this engagement? Can anyone give me examples where you might be asked by the management to perform this engagement? Anyone? Yes, no? Do you think management will come to you and say that perform this engagement? Okay. If not, then okay, what I'll do is few questions that I'm giving to you. Go and do research. When management comes and asks you to perform this engagement, what are the scenarios when management reach out to you for this particular engagement? Number one. Number two, if management comes to you for the performance of this engagement, is it the responsibility of the management to present and prepare the financial statement, or is it the responsibility or your responsibility? If the management is assigning, if giving you this assignment to present and prepare the financial statement, do you think it will be the responsibility of the management ultimate, or it will now shift on you?
The responsibility will be of the management always to prepare the financial statements.
Yes, absolutely correct. Very good. The reason, because the term here, it is to assist, not to absorb the responsibility. We will be assisting the management. We will not taking the responsibility of the management. So here, whatever we will discuss in this entire SRS, a lot of things are there. It will be to assist the management, not to take their responsibility. Clear? Any doubt till now, or any doubt in any of the part that we have discussed?
So we are only assisting them. Then why we are giving the report on it?
Very good question. So if we are assisting them, now the question comes is what kind of assistance we are providing. That depends upon, that decides the question, the need for the report. So in order to, answer your question, see what happens is when we perform this kind of engagement, okay, when management asks us to present and prepare financial statements and to assist them on, in preparation, you may come across some scenarios, or you may come across a case where the information given to you for the presentation and preparation of the financial statement is incorrect, or you are being asked to prepare incorrect financial statements, or you are being asked to present in incorrect way the financial statements, or you are being asked to comply with the incorrect financial reporting framework. Over there, how we will deal that particular matter, how we will report that particular matter, all these things are important. And that's why the report will come into the picture. Clear?
Yes, sir. Yes, sir. Clear. Thank you.
Any doubt? Any doubt? Okay. If no doubts,
So what are the examples of this compilation engagements?
Compilation engagement, see, if management, what happens is actually when compilation engagement happens, let's say for example, management wants to prepare annual financial statements. Management wants to prepare quarterly financial statements. Management, let's say, wants to prepare financial statement for the purpose of some IPO, merger, for investors. So over there, see, general purpose financial statement, there are few areas which everyone can prepare, management can prepare easily. But there are certain areas where they might need a help of a person who is expert in accounting. So they may reach out to you, okay, you help us in preparing this particular section of the financial statement. So over there, this kind of engagement comes into the picture. Basically, here I would say you become a management expert. A kind of a management expert that we have seen in SA 500, remember? So here you assist the management in presentation and preparation of that particular section of the financial statement, financial information, or whatever they may give to you. Any doubt? Any questions? If no doubts or questions, can we take some quick, MCQs as a revision and rapid fire one? Easy, but again, good to for the revision of the topic that whatever we have discussed today. Let me share. Okay, so there are few MCQs. Let's take these MCQs so that we can quickly revise the topic that whatever we have discussed today, and that will really help us to understand further. Okay, the first one. An engagement under SA 810 can only be accepted by auditor who has audited the full financial statement, internal controls, parent company, tax return.
Full financial statements.
Very good. Full financial statements is the correct answer. Second, an engagement under SRS 4400 agreed upon procedures provide what level of assurance? Reasonable, limited, no, absolute.
No assurance.
No assurance. Very good. In agreed upon procedures engagement, the practitioner issues a report on factual findings, qualified opinion, negative assurance, certificate of accuracy.
Yeah, report on factual findings.
Yes. If the auditor's report on the full financial statement contain a disclaimer of opinion, the SA 810 report on summary financial statement must state that it is appropriate to give, inappropriate to express, a qualified opinion, unmodified opinion.
Inappropriate to express an opinion.
Very good. The opinion expressed in SA 810 report is on whether the summary financial statement are a fair presentation, true and correct view, fair summary, complete and accurate record.
Fair summary of the audited financial.
Very good. So, quick 5 MCQs that we have taken to understand, do a quick revision of the topic of SA 810 and SRS 4400. Now, in the next lecture, what we will do is we will continue SRS 4410. I would request everyone to go through SRS 4410 in detail. Okay, and then chapter number 10 also that we will start in the next lecture. So, chapter 9, remaining portion, chapter 10, and we will solve some questions on the rest of the topic that we will discuss in next lecture. Okay. If no further doubts, then I propose to keep the session till here and I'll see you in the next session, guys.
Yes, sir. Thank you.
Thank you. Thank you, everyone. Good night.
Thank you. Good night.
Good night. Ashok ji. Ashok ji. Yes, sir.